Hey teammates, today we're going to work on the kitchen table presentation when training a new associate of ours. There's a couple things that I want you to keep in mind throughout this process. Number one, the reason why we're there is because of the trainee. So we always use the trainee, we refer to the trainee because that's the credibility of why we're in that family's home. Number two, ahead of time, let the trainee know that if we're not already prompted to the kitchen table, it's their job to ask, would it be okay if we sit at the kitchen table? While sitting at the kitchen table, the seating arrangement is really, really important. So we want both husband and wife to sit across from you, and the trainee should be on the side. We don't want to split up husband and wife, so that way they're all involved in the conversation at the same time. Oftentimes we're offered something to drink. I always suggest just getting water. It's important to drink the water that they give you as a sign of respect. Even if you're not thirsty, you at least have to take a couple drinks out of it. When you're on a kitchen table presentation, make sure you're dressed appropriately. You should never be underdressed when visiting with somebody. Always have the right materials with you. As you see today, I'll have my iPad, which has our presentation on it. You could also use our flip chart presentation. You should have a couple brochures with you, the insurance brochure, the How Money Works booklet. You should have a leave behind booklet for insurance, a leave behind booklet for recruiting, and anything else that you may use to help you through the process. Finally, we're going to go through a couple different alternative endings, alternative scenarios that may come up while you're in the field with somebody. We'll go through how to handle if they already have term insurance, how to go through if they already have group life insurance, or if they have cash value life insurance. We're going to go through all of those scenarios, and then at the end we'll go through how to handle prepping the client for a phone call from the previous insurance company or the previous insurance agent. We're going to go through a quick exercise that we do to help prepare those things that may come up. I suggest watching this video over and over and over again. You can never be over prepared, so that way when you're in the field, in the game, that you'll have better results because you'll be confident. And last thing, you'll see that I'll have our trainee taking notes throughout the process. It's very important for them to do that because we are there for their training. I'll already have a conversation with Abraham telling him that he should write any questions down, not to bring them up during our presentation. While we get into it, I'll do all the talking and he's just going to be listening. Through the closing process, through collecting the check, everything. All he gets to do, all he should be doing right now is taking notes, drinking his water. Well, I appreciate you guys giving Abraham some time tonight to help him out with his training. What did he share with you about what we're going to do tonight?
He just wanted to show us some concepts about how money works, I think.
Okay, very cool. How do you guys know Abraham?
I'm actually a co-worker of his from Nordstrom. We both work in the men's department.
Sweet. Okay, very cool. I gotcha. What do you do?
I work at Aetna. I'm an account manager.
Awesome. How long have you guys known Abraham then?
For a couple of years now.
Okay, cool. Good guy, right?
Yeah.
Yes.
Is there anything you need to tell that I need to know about him?
No.
No, he's great. No, he's
Hard
been
worker.
phenomenal. Yeah, absolutely. How long have you been in the area?
About 12 years.
12 years now? Okay. How long have you guys been married?
About 5 years.
5 years?
Mhm.
Have any kids yet?
We got two.
Oh, okay. How old are they?
3 and 7, a boy and a girl.
Okay, which one's the 7-year-old?
Boy.
Boy? Oh, in sports and everything already?
Starting to.
Yeah.
Anyways, so.
It only gets busier, right?
Yeah, yeah.
Yeah, awesome. Well, yeah, I'm going to go ahead and get into it. I mean, there's a couple of different things that could happen from today. First and foremost, we're here to help Abraham out with his training, to learn how to visit with families. Number two is we're looking for referrals for him. All of our entire business is word of mouth. We don't do any cold calling, door to door, anything like that. So as we go through some of the financial concepts we teach families tonight, if people pop into your head that you could introduce to Abraham, that would be really appreciative. Okay, can I get your commitment on that?
Yes.
Okay, and then also we're looking for people to work with us right now. Our office is expanding right here in the Dallas-Fort Worth area, so there's a lot of growth potential within our firm. So you may think of people that could benefit from working with us on a part-time basis like Abraham is, you know, in a position where they can make $20,000 or $30,000 or $40,000 a year with flexibility, and maybe even full-time potential with a 6-figure income. Okay, you know, are you familiar with Primerica at all?
No.
Okay, so what I'll do is I'll just share with you a little bit more about the company, and then we'll talk about how we help families on that side. You know, for me personally, I was introduced to the company about 10 years ago. When I got involved with the company, I knew nothing about financial services. So all the stuff I'm going to talk to you guys about tonight, I knew nothing about. Which is in fact why I got involved, because you know, after 4 years of college, no one had once taught me about mutual funds, insurance, mortgages, any of the things that you all participate in, we all participate in every single day, but we just don't know if we're doing it right. Does that make sense?
Right.
Have you guys ever taken a class on personal money and finance?
No.
No, right? None of us are, but don't we all use it?
Yes.
Yes.
Absolutely. So that's why I got involved initially. Also, I wanted to make an additional income, you know, an extra $1,000 or $2,000 a month. To me, it was a big deal, right? So that's why I got involved. I never planned on being full-time. I never thought I was going to be a manager or a trainer or a vice president. All that stuff came in after the fact. So there's a lot of growth potential within our firm right now for those that are looking for that, okay? So as far as Primerica is concerned, we're actually the largest distributor of financial products in the country. We have over 125,000 licensed representatives with more than 5,000 locations, right? But you're not really familiar with us because we don't do any mass advertising, like commercials on TV, etc. Which again is why our entire business is word of mouth, just working through people, visiting with families like yours. If you feel that we bring value, you'll introduce us to other people and other people, right? I found out a long time ago that professional services are referred because there's credibility involved. Does that make sense?
Yeah,
Right?
yeah.
So we've been around for 40 years now. We were created in 1977. For the majority of the last 40 years, we were owned by a giant company called Citigroup. Are you familiar with Citigroup at all?
Yes.
Yeah, Citibank, Citigroup, yeah. Probably sitting on it, right? We always been children. We were part of Citigroup for years. Up until April 1st, 2010, we had our IPO, or initial public offering, and that's where we spun away from them, and now we're independent. We're listed on the New York Stock Exchange. Does that make sense, right? That's a big deal. There are millions of companies that operate out of the U.S. today, less than 2,300 companies on all of the exchanges, and we were actually named the #1 stock in our industry last year.
Wow.
Pretty cool, right? Pretty cool. Our ticker symbol is PRI. We're ranked #1 in in-force term life insurance, and we're also a top company in our industry on investments. We have millions of investment clients with billions of dollars of clients' money that we help manage for them and grow for them, right? Like 401ks, IRAs, educational funds for your little guy, right? That's what we do, okay? As far as the background on our company, we're A+ rated with the Better Business Bureau. That's always good, right? We were recently ranked #3 on Forbes 50 most trustworthy financial companies. Are you guys familiar with Forbes magazine? You ever heard of it? Yeah, very credible resource business-wise, right? We were named #3 of the most trustworthy financial companies for our category. That's pretty cool, right? For a company that's only been in business for 40 years, right? We have A+ ratings with AM's Best. They govern and rate insurance companies to make sure they're paying their claims and they do what they say they're going to do, right? Less than 15% of insurance companies today carry an A+ rating. So it's always good that we have one of those too, right?
Right.
I was never good in school, but if I came home with that report card, everybody's happy, right? Conclusion really is that Primerica is a company that you could be proud to be associated with, right? You can be proud to do business with, a credible company. If I had to describe us though to you in a nutshell, I would say that Primerica is kind of like a financial supermarket. Maybe like the Walmart of the financial industry, right? If you think about that, Walmart is successful not because of their products necessarily, but because of all the products that they sell from one location, the one-stop shop, right?
Okay.
Yeah.
So kind of like Walmart would distribute tires or chicken. I get chicken, you know what I'm saying? You can go there for school supplies, you can go there for a new TV, they got it all, right? All in one spot. But if I go to Walmart right now, I'm not in the market of buying a new TV, but they're there for those that are looking for it, right? Walmart is a distributor of household products. Primerica is a distributor of financial products, right? So we would distribute financial products much like Walmart distributes other people's household products. Does that make sense?
Yeah.
Right? I'm sure you're familiar with some of these guys. All name brand strategic partners of ours, but we can help families with life insurance. We have the best in the industry. We can help small companies with 401ks or companies in general with 401ks. We can do annuities. I'm sure you're familiar with some of those mutual fund companies like Mason, Fidelity, Invesco. You ever hear any of those?
I have
Yeah.
my 401k through Voya.
Oh, there you go. Yeah.
Cool.
We can do legal protection, long-term care, auto and home. Literally, we can do pretty much anything in the industry, right? And it's really cool for us to be able to sit down with families and they can have the resources of a one-stop shop, one person that wants to help them hit their financial goals versus going to all these different companies. Does that make
Okay.
sense?
Yeah.
All these other companies want to sell you a product. We want to provide a solution,
Okay.
right? If I were to ask you, how are most families doing today financially? What would you say?
Struggling.
Yeah, they could be
Struggle.
doing better.
Yeah.
Yeah, what do you think causes the struggle?
Just working hard, living for today instead of,
Planning, not planning?
yeah.
Absolutely. Working, maybe not making as much as they need to
Right.
survive, right, financially. I mean, reality of Main Street right now is 75% of people in America are paycheck to paycheck.
Wow.
Isn't that crazy? 75%. Is that the American dream?
No.
Of course not, right? He's like, absolutely not. The average household carries over $15,000 in credit card debt. This is crazy scary. 1 in 3 consumers have no personal life insurance at all. And for those that do, are underinsured. They're not insured for the right amount in case something did happen. Last year, Social Security reported that the average American earned less than $30,000. 51% of people are.
Wow.
Isn't that crazy, right?
Yeah.
So what's causing all the financial stress, right? What's causing this failure? Because we're in some people would say the smartest and richest country in the world, right? Why are so many people paycheck to paycheck, right? And this is where we come into play because smartmoney.com did a research study and they looked at for every 100 people at the age of 65 after working a 40-year working career, 95% of them will fail financially. 95%. That's a high number, right?
Yeah.
Do you want to be part of that 95%?
No.
I know I don't. I know Abraham doesn't, right? But what are we doing differently to be part of the 5% is the question, right? Now, we believe there's 3 reasons why people are failing financially. Number 1, no financial education. As I mentioned earlier, the reason why I'm here today and the reason why Abraham is with me today is because we want to learn more about financial concepts. Because there's got to be something that the rich people know
Right.
that I didn't know,
Right.
right? And I guess I was smart enough to know that I didn't know, right? We lack a financial education. Number 2, we don't have financial coaches, right? So a licensed professional to help you implement a plan to help you achieve your financial goals, right? For me, when I was growing up, my family said financial advisors are for wealthy people. We weren't wealthy, no one was knocking on our door, so we didn't have one, right? And I think that's a lot of people today, unfortunately, right? And number 3, a lot of people don't have a financial plan. Now, I came with Abraham over to your home tonight, but if I wasn't with him, I would use a GPS, MapQuest, or something to help me get to your house without any challenges, right? Well, it's the same thing when it comes to our financial life. We need a financial game plan to get to our financial destination, a financial GPS, maybe. Does that make sense?
Yeah.
Yes.
Right? What do you like best about what we've talked about so far? So we talked a little bit more about the company, who we are as a company, some of the different products and services that we offer, what's going on with Main Street America today. What are some of your thoughts? What are you thinking about?
Well, I like the fact that you're helping people. I mean, that's the most important, educating.
In an area that people need help in,
Right.
right? Absolutely. What does Primerica do? Because I always ask people, if you had a financial education, you had a financial coach, and you had a financial plan, something that you could understand, what are your chances of succeeding financially? A lot better than if someone didn't have those, right?
Right.
So why don't more people get financial people? This is crazy, but according to U.S. Consumer Reports last year, the average cost to get someone like me and what Abraham's training to do, to sit down with a family, licensed financial professional, sit down with a family to do a consultation, to do that plan we talked about, is over $1,000.
Wow.
How many middle-class families, let's say a football coach and a teacher, have an extra $1,000 to get a financial plan done?
They don't.
They don't. They're paycheck to
We
paycheck,
don't.
75%, right? But if those are the exact things that you need to succeed financially, though, right? So it's kind of like a catch-22, right? So this is where Primerica comes to the table, right? What separates us, right? First off, we bring 3 things to the table that other people aren't. Number 1, we bring a financial education to it. We're going to spend time teaching people the concepts of how money works so they can win financially. right? Number two, they get us, a financial coach, a licensed person to help them understand the concepts, identify a plan, and then execute the plan, right? To help them move forward, which leads to number three is the financial plan. We bring a financial plan to the table. We do what we call a financial needs analysis with families, and most importantly, we do it on a complimentary basis, right? So we're not charging a fee for that. Well, the industry on average charges over $1,000, right? Is that good or bad?
That's good.
That's great, right? Let me ask you this. Why do you think we do it complimentary while everyone else is charging a fee?
Well, you asked for referrals in the beginning, so maybe.
Absolutely. This is how we market ourselves, right? You know, we don't cold call, we don't go door to door, we don't do any of those things, right? That all works, and there's a lot of people in our industry that do that. It's not the most effective way, I don't believe. I'd rather sit down with a family, bring value, and they introduce us to other families that they know that we can bring value to, right? Our entire business is word of mouth. So this is our advertising campaign. This is how we market ourselves. Does that make sense?
Yes.
Right? So, you know, talking about the financial concepts for a second, there's a lot of different things that we do in the industry, but really there are two areas that we have the biggest impact while planning with families, because there are only two financial situations, that is, that if the event occurs in your life and you didn't plan ahead of time, your family would be forever devastated, right? So that's what I want to talk to you guys about, because it's really, really important, okay? You know, as I say that, what do you think those could be? What do you think I'm talking about?
Well, I mean, you mentioned a couple of things, like 1 in 3 families don't have any life insurance at all. You know, they're not making enough money, stuck in debt.
Yeah, absolutely. You know, people tell me all the time, well, you know, you must be talking about debt. You know, I got to pay off my debt, and that's true, you do, and you need to. But there's time. You can do that over time, right? Then folks say, well, I don't know. They really don't know. And reality is, you can come back you can get out of your debt, but you can't come back from death, right? Because if you just think about this for a second, let's say you're a family, right? You got an average family, they're married, they have some kiddos, they got a home, they got debt outside the home. One challenge is if mommy or daddy die too soon. What do you think I mean by die too soon, Debbie?
Die while you still have the debt, and now that spouse has nothing.
Right, so you die or die too soon means you have financial responsibilities, but the income's not coming in, right? Because if you think about it, let's say you have mom and dad, they both make $3,000 a month, so the household operates out of $6,000, right? If dad doesn't come home tonight, what happens to his income? It also doesn't come home, right? So how does the family survive financially if the income is gone? Does that make sense? Right? So what is the only way that a family can prepare in the event that they were, you know, mom or dad died too soon?
Life insurance.
Life insurance, right? Absolutely. So that's one area that we have a huge impact on, because we help people identify the need for insurance, right? Now, let me ask you something. How familiar are you with the different types of life insurance?
I know I have it through my work.
Okay.
That's all I know about them. So.
Okay.
Yeah,
What about
pretty
you?
much. I'm not too familiar, but that's what I got at work right now.
Okay, cool. So what I want to do, if it's okay with you, I'll take 2 to 3 minutes. I want to educate you on the subject of insurance. You'll know more about this subject than you ever wanted to know, but education is always a good thing, right? You'll know more than your friends, okay? Because life insurance can be super confusing, but necessary, right? Every other commercial on TV, they're talking about life insurance, right? Every time you get something in the mail, they're talking about life insurance, right? So there's a lot of stuff out there, but it can all get categorized into 4 different categories. So that's what I want to talk to you guys about, okay? The first category of insurance is what you just mentioned, which is insurance through your job.
Okay.
We call that group insurance, okay? Employer-sponsored insurance. Does that make sense, right? The challenge with group life insurance, guys, is that statistically, only 1% of the policies will ever pay out. 1%. So if we have 100 dads in the room and we all died, statistically, one of our families would get that death benefit, right? Now, I'm a betting man, but I don't know if I'd ever bet my family's financial future that I would be that 1%. Would you?
No.
Of course not, right? What people say is, well, why? Why does it work like that? right? Well, in reality is the company owns it, not you. So inside the policy that you don't actually have, in fact, do you guys have a policy?
No.
No, you might have a certificate of insurance, but there's a policy that your company has, because they're the owner, that illustrate a lot of exclusions that you don't know about. Sometimes you have to die on the job, you have to be clocked in, you always have to be an active employee. Sometimes you have to die certain ways, certain times, you have to work there for a certain amount of time, all kinds of crazy stuff, right? And I don't know about you guys, but I want a plan that if I die, my family gets a check. Right? So when we have life insurance through our job alone, it is a huge false sense of security. Does that make sense?
Yes.
Right? The second category of insurance is something called AD&D. Stands for accidental death and dismemberment. The problem there is in the name, accidental death. I have to die in a plane, train, or automobile.
Wow.
Do we know we're gonna die?
No.
Of course not. So if I die of a stroke, cancer, anything like that, does not pay. Right? Again, I want a plan that if I die, my family gets a check. Wouldn't you agree?
Yes.
Right. The third category of insurance is what 8 out of 10 families today, they fall into this category, okay? It's the cash value category. Inside that category are plans like whole life, you might have heard of it, whole life, universal life, final expense life, flexible premium life, a lot of different names to it, right? But there's a savings element attached to the insurance program. So it's not pure insurance, it's sold as an investment a lot of times. Does that make sense, right?
Okay.
However, if the family knew how it worked, they would never, ever own it, okay? The fourth category of insurance is what all consumer advocates suggest families have. I don't know if you're familiar with like Dave Ramsey or Susie Orman or Money Magazine or SmartMoney.com, but just third-party consumer advocates, right? They will always tell you to have term insurance. Term insurance, right? Term insurance is pure insurance. There's no savings to it. Does that make sense?
Yeah.
Yes.
But it can't be that easy. It can't be that simple because there's a lot of different kinds of term. Annual renewable term, 5-year renewable term, return of premium term, scheduled term, and something called level term. And level term is kind of like your mortgage. Fixed rate for the duration. Okay, there's no surprises. And that's what I want. I want level term insurance because I don't have to worry about my rates changing in the future.
Right.
Does that make sense?
Right.
Right? What do you like best about what we've talked about so far, Debbie?
Just the education. I never knew that there was so many different types, and especially the fact that my group might not pay out. That's kind of scary.
Yeah. How much do you pay for it?
I don't. So it's free.
It's totally free? Yeah. We always tell families when we sit down with them for planning purposes, you always take any free insurance, even if it's $1 or $2 or $5 a paycheck, take advantage of it, but don't count on it, right? You should always have your own insurance outside of work, because if you leave your job, what happens to your insurance? It's also gone,
Yeah.
right? And do you plan on dying at work? Of course not, right? Do you plan on retiring where you work? Maybe or maybe not. But it still won't pay out if you're not an active employee, right? What about you, Juan? What do you like best about what we've learned so far on this subject?
I definitely liked how you educated me on how life insurance works.
Yeah,
Right, and the fact that my group policy probably won't pay out.
yeah.
Right.
Does that concern you?
That does.
Absolutely. Right. So I'm really glad that we're able to come over tonight. It was really just for Abraham's training, but we might be able to help you guys out in some areas too. So typically when a responsible family like yours doesn't have insurance, it's only one of a couple different reasons. One, you didn't see the need for it. But now after we talked today, you see the need for it, right?
Yes.
Yes.
Absolutely. Number two, you just didn't think you could afford it. Or number three, you just never got around to it. Which one applies to you guys?
Just didn't get around to it.
Never got around to it?
Mhm.
Okay. And what about you, Juan?
I honestly thought it was outside my budget.
Outside your budget?
Mhm.
Okay. So if we can identify a plan and it's within your budget, then you would get that protection. Okay. So let's take a look at what you might need. Okay. There's a little exercise that we do to identify how much coverage somebody needs. So let's just run through that real quick.
Okay.
Okay. And we call it the dime method. It just helps us figure out how much you need so you're not overinsured and wasting money, but you're not uninsured in case something does happen. Okay. So we do the dime method. Very simple. Okay. So let's just say this. One, if something were to happen to you, is there any debt that you'd want taken care of? Maybe consumer debt, credit cards, student loans, anything like that. Is there?
I got a little bit of a student loan and credit card debt. That's about $20,000.
20,000 total? Okay. Debbie, if something were to happen to you, is there an amount that you would need taken care of?
I think I have about 5,000 left on my student loan.
Okay. Any credit cards or anything?
No.
Looks like she's doing better than you. No, absolutely. I stands for income replacement. So if something were to happen to either one of you, is there an amount of money you need to replace in order for you to continue on living financially, right? So for example, about how much money would we need monthly to replace your income in the event that something were to happen to you so your wife can take care of your 2 kids?
We'll probably need about $3,000 or something.
$3,000, okay. And what we usually use is that you take your children, get them to the high school age, right? So maybe for a 10-year time period, up to maybe 15, depending. But at 10 years, at $3,000, that's $300,000 worth of coverage that you need. Does that make sense?
Yes.
Debbie, what about you?
About 3,000 too, yeah.
Okay, so maybe the same, so 300,000 there. Okay. Do you see how we get that?
Yeah.
Great. M stands for mortgage. So if something were to happen, would you want a portion or all of your mortgage taken care of, paid off?
Yes.
Okay. How much do you owe on it right now?
200.
200,000, and that's for both of you, right? You'd want them
Yes.
both. Okay. And E stands for education. So if something were to happen, would you want to take care of your kids' education? Okay.
Absolutely.
About how much coverage do you think? Maybe 25,000 each or 50,000 total?
Yeah.
Probably about 50,000.
Sounds about right.
Yeah.
Of course, we're not planning on needing this, but if something did happen, you can invest that and let that grow till they get to the college age, right?
Okay.
So 50,000 total. Okay. So just looking at this here, that shows that Juan, you need $570,000 worth of life insurance coverage, right? Debbie, you would need $555 in life insurance coverage. So God forbid something did happen right now. Can you see why you're dangerously underinsured?
Yeah.
Yeah,
You need
because
that.
I only have like 60,000, or 60,000 in my group.
For group insurance, right? Do you know how much your group you got?
Mine's about 1 year's
Okay.
salary, so.
Okay.
30,000.
How much?
30,000, yeah.
So that even if you were to get that, right, which you wouldn't count on, but even if you were to get that, you would still need, you're still $500,000 short,
Right.
right? I'm really glad that Abraham brought us over tonight, so at least we can look at that. Let me ask you this: how much would you expect $500,000 worth of life insurance or $1 million total of insurance to cost on a monthly basis? What would be a fair amount for that?
$30.
Yeah, I was thinking the same thing, $35.
$35? Is it a piece or together?
Together.
Together? Okay. Let me ask you something. Do you have car insurance?
Yes.
Okay. How much do you pay for your car insurance? Together. Let's give me the together numbers total.
150.
150 and then,
Same.
Same.
so 300 total? So 300, okay, so you pay $300 a month for your car insurance, right? Worst case scenario, let's say they total your car. How much are they going to give you for a check to make you whole? How much is your car payoff value right now?
Probably like $8,000.
8,000? Okay. And what about you, Debbie?
Probably about 20.
20? Okay. Do you guys have homeowners insurance?
Yes.
Of course you do, right? How much do you pay for that right now a month?
130.
130? Okay. And if, God forbid, something happened and your house burned down, what is the total loss, the amount of money that they're going to give you to make you whole?
Probably around 240.
240? Let's just say 250,000.
Right.
Okay. So just so I understand, you guys willingly pay $300 a month for a potential of $28,000 check. You pay $130 a month for a $250,000 check, and you want to give me $30 a month to give you $1 million check?
Didn't think about it like that.
Now let me ask the question again, right? Because I didn't say what do you want to pay. I said what would be a fair amount to pay. What would you expect to pay?
Okay.
Right? So now understanding how insurance works, right? What would be a fair amount for $1 million check?
Right.
$400 a month.
$300 or $400 a month. Well, the good news is it's not going to be anywhere near that because you guys are in good shape. You're not tobacco users. We talked about
Right.
that.
Right.
You don't have any medical challenges, right?
Right.
But it's going to be more than 30,
Okay.
right? How much would be a fair amount that you would comfortably be able to use to take care of your insurance needs every month? or maybe a week. Think about that. We make $25 a week, $30 a week.
Yeah, for me, $25 a week. Yeah.
Okay, so if we can identify a plan right around $100, $105 a month, that'd be good for you.
Yes.
Yeah.
Okay, so let's do that. Let's look at how much coverage we can get for that amount. Okay. Let's take a look and find out what you would be able to qualify for.
Okay.
And then identify the plan that would work for you, and then we'll start that process. But get your edge. Looks like you're 37 right now, Debbie?
Yes.
Okay, and Juan, you're 38?
Yes.
Okay. So with term insurance, there's a couple factors that go into play as far as how much it would cost. Obviously age, right, and health, which you guys obviously are really good there. The next thing we look at is how long of a term do we want locked in for, right? Like a 10-year term, 15, 20, etc., right? At your current age, and because your kids are already, 7 and 3, I would suggest probably at least a 20-year term. Because if something happened today or 15 years from now or whatever, you're locked in, you're good for the next 20 years, okay? So right now, if we did a 20-year term for $500,000 each, so $1 million in total coverage, right now that would only be $115 a month.
Oh, okay.
$115, right around what you guys were thinking anyway, right? Right around $100, $110 a month, right? Does that make sense?
Yes.
Yeah.
Are you comfortable with the 20-year term?
Yeah.
Does that make sense? With our insurance, which is different than everywhere else, at the end of the 20 years, if you choose to, you can renew your term without any medical questions. So even if you have health challenges at that point, you're guaranteed renewable. And we coverage people until age 95, which is pretty cool.
Okay.
Does that make sense?
Yeah.
But at least for the next 20 years, we know for sure, locked in rate, $115 a month. So is that an amount that you would feel comfortable with?
Yes.
Okay. So all we're gonna do today, because you can't buy insurance, you have to apply for it. There's an underwriting process. We'll take your application today. We'll submit the $115 in as a deposit for the insurance. Our paramed company partner will contact you to schedule a health review. And all that is they'll come out to your house nights, weekends, during the day, anytime really. It takes 10, 15 minutes, like I said, per person, but they'll do your height, weight, blood, and urine. They'll send the results over to our underwriters, and usually within 5 to 10 days from that point, from the time that you do it, your policy is issued.
Okay.
Sometimes there's a delay if it takes a little bit longer to get the physician statements from your doctors, but usually it's pretty quick, within 2 to 3 weeks after you do your medical, okay? Once the policy's issued, we'll come back out, of course, to bring you your policy, make sure everything looks good. You'll pick a draft date, let's say it's the 15th of every month. Once you accept the policy, the money submitted as the deposit will cover your next month's insurance premium. Okay, so this entire process is pretty much free insurance during the underwriting process, but most importantly, as soon as you do your medical, as soon as we submit this and you do your medical, you're gonna have conditional coverage. So if something did happen and we were gonna issue the policy anyway, our company would deliver a check to your beneficiaries, to you guys.
Okay.
Okay,
Cool.
so that's really important since you don't have any insurance now.
Right.
Okay, is that comfortable? You're comfortable with that?
Yes.
Great. All I need from you guys real quick is your driver's licenses. Abraham will take a few minutes, we'll put all this stuff in, and then we should be good to go.
All right,
Okay.
cool.
Why is cash value not a good product?
Not a good product? Okay. Are you familiar with cash value insurance? Is that something, do you guys
Yes.
own it?
Yes, we do.
Okay. What kind of policy do you have, do you know?
It's a whole life policy.
Whole life?
We
Okay.
have 2 Gerber policies for the kids.
Okay, yeah. Like I said, 8 out of 10 families today, that's what they have because that's what's sold, right? Tell me this, why did you get the insurance? Is it for the savings, for future? Was it for more, or was it more for insurance, which is protection?
For savings.
Yeah, the savings on it.
Yeah.
For you guys or for the kids?
For the kids.
For the
yeah,
kids, right?
yeah.
Okay. And what about for yourself? What was the purpose?
I think
Huh?
a little for both.
Yeah,
both?
Yeah.
Kind of do both?
Yeah.
Okay.
Yeah.
No, I totally get it. Okay. So what I want to do then is I want to help you understand how the savings portion works in an insurance policy. Okay? So let's just forget about insurance.
Okay.
Forget about insurance. And let me know which one of these banks you would bank with if you could choose. Okay? And we're just going to call them Bank A and Bank B for simplicity purposes. Okay? Bank A says, by the way, it's a nice bank. Well-known bank, hardwood floors, Egyptian cotton rugs, right? 1,000 people greeting you. Very nice bank, right? Well-known. You walk into that bank and you say, Dustin, I want to start saving money for my future, okay? And you want to start saving $100 a month, okay? And you say, Dustin, I want to start saving $100 a month. How does your plan work? And I'll say, I can help you with that, Debbie and Juan. But for the first 1 to 3 years that you give me $100, your account value is going to be $0.
Okay.
So that could be 12, 24, that could be $3,600 that you put into your account, but you have a 0 balance. How do you feel about that?
That's
Not so good.
Not so good, right?
Right.
Kind of mad, in fact,
Right.
Number two, you say, well, okay, after the 1 to 3 years or however long my plan takes, what kind of rate of return should I expect for my account? And I'll say, you know what, we will guarantee you 1 to 4% interest. Now, I guess that's better than most banks right now at 0.5%. Right? So you're like, okay, that's not too bad, considering the alternative, right? But then you ask me the third question. You say, Dustin, what if I want to take some of this money out of my account that I've been saving for the last 20 years to send my kid to college or buy my first home or have some medical expenses? I can do that, right? And I'll say, absolutely. We're going to loan it back to you at 5 to 8% interest. Now, does it make sense to borrow your own money?
No.
Oh, kind of crazy, right?
Yeah.
Right.
The fourth question, very, very important. You say, okay, Dustin, let's say I've had this account now for 30 years and I saved $100,000 over time. And you say, God forbid something happens to me. I can leave this money to my family, right? And I look at you guys and say, you know what? I know how families always fight over money when somebody dies. So to avoid all that, we're going to go ahead and keep your account value.
Okay.
How would you feel?
No.
Not so good, right? Keep all the money. So you're smart people, and you say, Dustin, I like you. I know you represent a company that's well known, but I'm going to check out some other options. And you walk across the street and you see Abraham, and you walk into his bank, and it's Bank B, also well known, and you say, Abraham, I want to start saving $100 a month. How long is it going to take for my money to show up in my account? And he says, immediately. Well, that sounds good, right? And then you say, well, what kind of rate of return should I expect over time on this account? And he says, you should expect anywhere from 10 to 12% over time. A little bit better than 1 to 4, right?
Yeah.
And then you ask him, what if I want to send my kid to college, or I have some medical expenses, or I want to buy my first home? How much are you guys going to charge me? He looks at you like you're crazy. There's no loans here. Your money's your money. And you ask that last question, very, very important question. You've had this account now for 30 years. You saved $100,000 in this account. And you say, Abraham, what if something happens to one of us? What happens to that money? Are you guys going to keep it? And he says, absolutely not. Your family gets it, or whoever you list as a beneficiary, right? Now let me ask you something. Which bank would you bank with?
B.
Bank B? Okay. Would you ever knowingly bank with Bank A?
No.
No. If you were banking with Bank A, would you want to know about it?
Yeah.
Yes.
Of course, right? If you were banking with Bank A and you could move it to Bank B and it didn't cost you anything additional to do so, would you want to do that?
Yes.
Yeah.
Okay. How soon would you want to do that?
Immediately.
Immediately, right? What if I told you that Bank A represents the cash value inside your whole life insurance right now?
Find it a little hard to believe.
Yeah.
Hard to believe, right?
Yeah.
Because you would never normally do that,
Right.
right? Of course not. Well, why don't you do this? Why don't you grab your policy real quick? We'll identify and see how your contract works, okay? So we can look at exactly how yours works. But if it works like I'm suggesting it does, you'd want to move that to Bank B, though, wouldn't you?
Yes.
Okay. So why don't you go grab your policies? We'll take a look. So what do you like best about what I've taught you so far?
Just the education.
Right.
We do have the right insurance.
You have term insurance?
Mhm.
Okay, very cool. How long ago did you get it?
About
5
5
years
years
ago.
ago when
Yeah.
we got married.
5 years ago? Okay. Do you know what kind of term you have?
I think it's 20-year, I think.
20-year term?
Yeah.
Okay.
Yeah, it's the type, I think we can even get our money back at the end of the term.
Okay, so it's probably a return of premium term.
Yes.
Okay. Do you understand how that product works?
Not
We
really.
get our money
Just sounds
back.
good, right?
Yeah.
Okay, so what return of premium term is you pay X amount per month. In fact, how much are you paying a month right now?
I think it's about 150.
$150 a month?
Mhm,
Yeah.
mhm.
And how much is the death benefit or the face amount? Do you know?
250 on me and 250 on
Yeah.
one.
Okay, so 500,000 total, 250,000 on each.
Right.
Yes.
Okay, gotcha. And do you have any medical challenges at all? Are you taking medicine for anything?
No.
No.
Obviously, you're not tobacco users or anything.
No.
Okay. So how return of premium term works is you pay a higher premium every single month, and then you get all the money back later if you don't use the death benefit. Okay, but if you do use the death benefit, you don't get anything back.
Mm.
Would it make sense maybe if you paid lower monthly premiums for the next 20 years and you save that money and maybe in a mutual fund or a Roth IRA? So that way it can grow at a higher rate of return. And then if you needed the death benefit, you would still have your money, right?
Yeah.
Because for you guys to get $250,000 in coverage on each for a 20-year term would probably be less than $100 a month.
Oh, wow.
So you could take the difference and invest it for 20 years and have a lot more money in the future.
Okay.
If we could show you how you're able to do that, is that something you'd be interested in?
Sure.
Yeah.
Okay. Also, one big thing that a lot of folks don't realize is at the end of the term with the return of premium term, if you still need insurance, you have to go through insurability again. So when you guys got it 5 years ago, you probably had a nurse come out and do your blood and urine and health review type stuff,
Right.
Mhm.
You'll have to do that again, but that's 15 years from now in the future. So if you're uninsurable, if something happened, you had a doctor's appointment, something, or car accident, and you're uninsurable now, you don't get insurance,
Oh, wow.
okay? Once we identify a plan for you with us, at the end of the term, you have guaranteed renewability. So no matter what happens, you're guaranteed coverage until age 95. Okay? It would adjust at the end of the 20 years. It would adjust according to your age at that point, but not your health anymore. Does that make sense?
Mhm.
Okay.
Yes.
So let's take a look to see how much it would be. Do you have any questions on anything that we've taken care of tonight then? You understand the next step, you'll get a call from exam 1 to schedule your paramed visit, the health review, and you may get a call from Primerica's tele-underwriting department just to ask the same medical questions that we just did. Okay? So this is your booklet, the conditional coverage booklet that we talked about. The main information here again is on page 1 here. The conditional coverage effective date is as soon as you do your medical. Okay, so this is just for your records since we did everything electronically. I wanted to leave this brochure with you. It just reaffirms all the things that we talked about, the facts of Primerica's insurance versus everyone else. You may even find insurance online cheaper than Primerica, but it's cheap for a reason, right? We have the best, most affordable product in the industry, especially with all the features that we have. Like we said, the guaranteed renewability till age 95, that's really, really important. The increasing benefit rider, a year from your policy anniversary date, you'll be able to increase your coverage by 10% without any medical questions, right? That's an optional thing, you don't have to do, okay? And then, as we talked about already, there's no war exclusion and 1 policy per family, so there's less fees, okay? That. One last thing I want to do with you real quick before we're done for today is because you already have insurance from that other company, the agent might try to get back in touch with you because they'll get a notification from our company that we intend on replacing that policy, okay? But first thing I want to tell you is you do not have to respond to their messages or anything, okay? But what will happen is if they talk to you, what they're going to try to do is tell you what you did tonight wasn't good and to keep their policy, right? But if you could get, as we talked about, $500,000 worth of coverage on each of you for less money than you're paying right now with them,
Right.
is that good or bad?
Good.
That's good,
Good.
right? So you made the right decision for sure, okay? But here's what's gonna happen. They're gonna try to convince you that whole life is good. But we just talked about that, whole life is not good,
Right.
right? And there's not one third-party consumer advocate that will ever tell you that it is, okay? So forget about us insurance folks, right?
Okay.
Listen to the experts and they all say whole life is bad, okay? They're gonna try to attack me. They're gonna attack the agent. They're gonna say, I don't know what I'm talking about. They're gonna say, those Primerica agents are part-time, I'm a professional, I know what I'm talking about, but I have the same exact license that they have, okay? And that's issued by the state, okay? They're gonna try attacking our company. They're gonna say Primerica doesn't pay their claims. They're gonna say Primerica's not a good company. They're gonna say all kinds of crazy, it's crazy what people say today, right? But as we talked about today, we have A+ ratings with the Better Business Bureau, AM's Best, Standard & Poor, right? A+ ratings with everybody, listed on the New York Stock Exchange, #1 company in the industry, in our industry, on #1 stock performing company in our industry. I think we're doing something right,
Okay.
right? Do you have any questions about that?
No.
No.
Finally, they're gonna say, oh, you want term? I can sell you term. They're gonna come back and try to offer you term, and it may be even less expensive than ours if they try to sell you a subprime product, okay? But my question to you is, would you ever let a thief back into your house?
No.
No. In reality, for the last 5 years, you've been paying $200 a month, $150 a month, right? So that's thousands of dollars that you could have left for your family, saved for your future, right? Instead, you gave it to this company. Why would you ever let a company that stole from you, an agent that stole from you for years, another opportunity to earn more money on your business? You would never do that, right?
No.
Of course not. That's what's gonna happen. They may call you, they may not, but if you actually talk to them, that's what they're gonna say, okay? But I wanna reaffirm that you're making the right decision, more coverage, less money. When we get back together, we're gonna be able to help you invest the difference, right? So you'll have more money for the future. And then of course, who cares about your family more? Abraham or 1-800-INSURANCE,
Right.
right?
Abraham.
Of course. So when we get back together, we'll take care of the investments part, teaching you about that. And we'll also identify some people that you may be able to introduce to Abraham that could benefit from the same education that your family did. Okay, is that fair?
That's
Yeah.
fine.
And then, of course, I want to talk to you guys maybe about working with us because we're going through some expansion right now. And if you could teach people these financial concepts like we did tonight in the last hour and make $1,000 or $1,500 a month doing that in your off hours, maybe worth it for you. Right?
Yeah.
So we want to look at that too. Okay.
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 Okay. Thanks.